The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more into the breach do we go, dear friends.
The following takes place between 2 p.m. and 3 p.m.
Didn't hear anything. Was there anything? Oh. Slow on the uptake today. Just have to look at it. Off 12 on the S&P cash at 2761. Dow's off 280. Nasdaq's off 37. Russell's off 4. And of course, kind of a pattern setting up, and that is that we go lower. Everybody tries to buy it all day. We don't get to the highs of the previous day and don't erase the losses. And the next day we gap down even lower. So what's happening out here? Well, we've had, 8 years of training to buy the market every time it pulls back, no matter what it does. Sometimes that wins, sometimes that does not win. But I can tell you now that this is almost the same mentality I saw in the dot-com phase, and that is, man, you got to get in. You can't, there was that fear of missing out. Let me put it that way. Still suspect that we have lower in the S&P to go, but we'll see how that plays out. A lot of other stuff going on. The euphoria just smacks of .com, to me anyway. That is, nothing has really changed in the market, but everybody just has to get in. They got to get in. They must be in. Get in now. You're going to miss it. And where did we hear that? Bitcoin. You got to get in now. You got a holder. You got a H-O-L, what is it? H-O-L-D, H-O-D-L, holder. You got to hold on for dear life. You got to be in the market. Well, markets go higher and markets go lower. And when markets only go higher, I get nervous. When markets only go lower, I get greedy. Start thinking it's time to buy. So we've had some pullbacks. We got a little bit of a reaction. Even in the worst glut of profit gluttony in 2000 in the dot-com, the market kind of came back from those highs the 3rd of January, and bounced back up into March. People still didn't get it. They got a second chance to get out. And you know what? They still wouldn't get out because guess what? They were making so much money. They had to be in. We've got to be in. I must be long a stock. My fear is missing out. Now, you know what? If we pulled back and we made some kind of sign that said we'll buy, then I'd be all bullish and warm and fuzzy. I don't have any problem with being long. I do have a problem being long when the market is very long in the tooth, and that's my call. You don't have to be right all the time. You just have to be really right when you are and a little bit wrong when you're not. But we don't live in one-way markets. And I think the complacency is what bothers me the most. I probably had bumped into maybe 2,000 traders off and on. There used to be a meeting on Tuesday nights. I think it was on Tuesday nights in downtown Tampa. One of the pastors had his church available, and everybody could meet and discuss trading. They had guests that would fly in. We'd have 600-700 people packed into the church. Everybody was supposed to throw a 10 in the plate as it went around for the church. So they're just using their facilities. The pastor was quite the trader too. A year later, maybe 75 people would show up. But you always have to worry let me put it this way. When everybody is on one side of the boat, I always get nervous. And for the most part, does the market turn on a dime? It does not. But the gluttony of making profits doesn't fade in a day. Didn't fade in a day in the dot-com world. Didn't fade in a day in the blow up in 2008 with houses. It took a little while for everybody to figure out what was going on. I don't know if there's anything that big. I just think we could pull back a little bit. I don't think we just have to go straight up. And as Ronald Reagan said, markets go up and markets go down. And they go down, up and down for various reasons. Almost always, you're only able to figure that out in the rearview mirror. So, you know what? Is the market over in a day? It is not. As I've said for a few weeks now, I suspect that we're pulling back into July. This isn't a call for the next 5 minutes. I'm not trying to tell you what day it is by looking on the second hand of my watch. I know a lot of people trade in very narrow time frames. I do not. But you know what? Every time I've seen everybody that just can't stand to get in, they can't wait for a second. They get clubbed. And, you know, for me, when I look at something like the IWM, has anything changed financially in any of those stocks? No. Everybody just has to be in them. I think it's the most crowded trade since the dollar. Everybody was short the dollar. Everybody was sure the dollar was going lower. And Mr. Market had a different opinion. Now, why does everybody have to pile back in each day in the IWM? Why isn't there a dollar or two pull back and then a little bit up? Literally, they can't wait 5 minutes to get in. That tells me one thing, and that is euphoria. We've got to be in, we've got to be in. Always makes me nervous. So I could be right and I could be wrong. It just, I'm going to be wrong a little bit or right a whole lot. So we'll keep an eye on that. Well, let's go to a little bit of news and then we'll get, you can always email me at path@tfnn.com. Okay. Oh, we need to do some history.
That it's all just a little bit of history repeating.
Scottish engineer Alan Campbell Swinton published a brief letter in the Journal of Nature describing the essentials of making and receiving television images. This is in 1908, by the way. He described using an electron gun with the neck of the cathode tube to shoot electrons toward a flat end of the tube, which was coated with light-emitting phosphors. Others, like Farnsworth and Baird, would just make such devices years later. And if you're a big fan of Futurama, you'll recognize the Farnsworth name. Because guess what? He was named after a famous engineer, too. The same Farnsworth that helped develop television. We'll be back in a minute, and we'll get into some charts. Still off at 12 points on the S&P cash. Oop, where are we at? And one other thing going on in Apple. We'll get to that when we get back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And Apple is going to the Supreme Court. Here come the judge. Here come the judge. Anyway, gap down today. A little bit of issues, I think, with trade, but I think a lot more people are looking at this trip to the Supremes as an issue on whether or not its App Store violates antitrust regulations. I can say, at least from reading the law, it does. We did gap down below this long consolidation range that started back May 9th and ran to May 31st. We did went up to 194.20. Now we're back down to 183.45 for the low today. It's around 185. My guess is that they're going to lose. And I'm going to say educated guess, not just a flip of a coin. The reason why is they've basically made it almost literally impossible to install anybody else's app on the phone. You own the phone. If they would have leased the phone to you, they may have had a case. But since they sell phones and don't lease them, they have a real problem. And that is, it's yours to do with what you want to. And if they avoid other people selling into your system, then that's it. Now, that's called the walled garden. And people have tried it in the past. It's never risen to the issue. The problem Apple has is, wow, it's been rather obnoxious about this. It's also cut off potential competitors with very flimsy excuses on why it's done that. And that is problematic. There are more than enough cases to show that Apple has used its position as gatekeeper for the App Store to basically run away anybody that in anything that they're doing. This is the exact same reason that Microsoft got blown up with its issue and not allowing anybody else to install a browser on their machine. Theoretically, they have other people that can write software, but Apple um, just randomly, capriciously. That'd be a lawyer term, wouldn't it? Capricious, arbitrary. I'm guessing those are all the words that are going to be used in front of Apple. And it wouldn't be that it's an app that, is got a virus in it. It's just somebody that might compete with them on streaming music or videos or a handful of other things. But there have been a litany of people over the last few years that have cried foul when Apple said that they wouldn't approve their app for variety of reasons. And my guess is those people are all lined up to tell Apple that maybe they shouldn't have done that. So, you know what? If you're the king dog, I don't know what good it does you to just go around putting your thumb in the eye of everybody. It's not going to matter that much different to your earnings at the end of the year. But once you get the government in your business, about like having the mob in it. Not a lot of neat stuff. Did cover one short position today. Covered Western Digital. We shorted this at $87. It's back testing its previous low on lighter volume today. This thing, actually, it gapped up on the 14th of May. Did so with 6.3 million shares. We're going to do, I don't know, a whole lot less than that today. Went ahead and covered this one earlier. My guess is, though, it is going to probably do some kind of ABC. So I'm looking for the retracement to go after this one again. 73.84 would be a 50% retracement. 84 to 84.89 would be a 50% bounce, or a 618 bounce. This one kind of does that, but in one of the weaker parts of the SMH, that one got clubbed today. And of course, mostly, or let me put it this way, some issues in the SMHs about smartphone sales declining. I think those are fairly good. There is a very nice support level in the SMHs that I think this thing's going to work its way down to. That is a confluence range back here at 101.78, 101.17, fairly narrow. That would be probably where I'd be looking at this one. Let's clean this up a little bit so you can see it a little bit better. But you've got this. Let's do this because I think you can still do it, can't we? Nope, right there. Okay. You've got a big move from July 3rd in 2017 is the first Fibonacci to key off of. The second one is $93.88. The high out here off of 114.55 got kind of up there. We sold off with volume still out here. But if you were looking for these to hit some technical level, you do have a little gap up. It doesn't have much in the way of volume on the 21st of May, so that's not much of a support level. Is this thing instantly going to run to 101.70? Probably not. But my guess is it will at least come back down to that level and test it. If you are bullish, that's probably the buy point. And I can't see anything changing that. Cell phones are slowing down. There's not a lot of people buying equipment until 5Gs really roll out somewhere around the end of the first quarter in 2019. And it continues to be problematic. Again, a lot of wind in the face of a lot of these companies right now. And I don't think a lot of people are actually looking at it. We're still off, what, $1.50 on the SMHs, 107.53. Let's take a look at the dollar. We haven't talked about that yet today. Dollar's up a quarter. We've, of course, moved on to the September contract at DXU8, $94.65, which is up 24 cents, 25 cents. When we look at the metals, haven't moved that much except platinum, of course, more of the industrial metal. It held up better at the highs, and now it's kind of with the trade issues, kind of the weak sister out here with copper. Platinum off 1.6%, copper off 1.88% on the day, and copper that $3 level has been kind of support. The question is whether or not we see that break in the next day or two, and that wouldn't be good for industrials, which are already taking the brunt of the pullback in the markets today. 2762 on the S&P cash, which is off just a hair under 12. Dow's off, still off 280 points. The Nasdaq still off 33, and the Russell's off 3. Give me a call at 877-927-6648, and email me, path@tfnn.com. Okay, what else is going on here? Oh, we're going to break.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And what are we at here? 2760 on the S&P cash. When we look at the volume, we've got about 5 billion shares already. And, excuse me. Why did that change? Excuse me. I said I'm looking at the wrong thing. 4.4 billion shares already. So a fairly good day. Probably going to end up with about 7.5 billion shares or more on the U.S. equities market volume summary from the CBOE. That's all of the volume of everything traded, NASDAQ and NYSE. So we're going to have certainly a pickup from yesterday's I think it was 6.6 billion shares. So we are seeing a little bit out here. Okay. What else do we have? Okay, let's start looking at some other stuff. Question to look at Microsoft and see if we have anything in that one. Still one of the stronger stocks. Didn't test yesterday's low. Volume continues to remain low. Some very good things going on at Microsoft. Nothing's going to change that in the near future. If I seem a little bit tired, it's because they've released some new machine learning stuff, and I've been working very hard at understanding it, mostly because I learned the wrong way. Their stuff works kind of like what programmers are supposed to think they're supposed to work, and of course, because machine learning actually came from colleges, it's all wrapped up in stuff that most line of business programmers don't use, mostly because it's very hard to maintain the software in a lot of the stuff that they do, various reasons. But now it's one of those things where you learn it wrong. I'm going to say wrong because it worked that way, but it wasn't a great way to do it. And now I'm having to unlearn some of the things I've learned. Anyway, these guys are coming along. I like all the new stuff that they're working on. They're going after programmers. They bought, of course, GitHub, and they just continue to have all the right moves. That was kind of a bad movie, wasn't it? Wasn't that mid-'80s? All the right moves? Can't remember. I don't think I liked it. I think it was a football movie. Question in the den to take a look at LRCX. And okay. Well, you want to see this thing test a spike of 156.33. That's the February 9th low. You have to like that this thing has come back fairly decently. Energy is a little less. It's not meticulously less, but it is still less. Got a little bounce out here, but man, you want to get that spike 156.33. You want to be into that candle of February 9th when this thing fell apart. A lot of these stocks are doing that. They're pulling back, and you want to test. We're kind of just above that now. Does it have to instantly go there tomorrow? The answer is no. A trade there at whatever that is, I'm going to say 165, 168 in that range. You've got very good resistance above at 191.68. So if that would make some kind of buy signal out here around the 165 area on it, your trade, I would say, would be to that 195. It is. I need to zoom in a little closer here. Yeah, 195 to 196. So be a nice range out there, especially if you can find calls on that for a very low price. The downside is you spiked the previous high of January 25 with 8.25 million shares. With 5 million shares, it closed back in there, and now you're making the pullback. But you've got a gap, and you've got that spike. So I do like that, but you want to see this thing pull back into that gap and that spike. You need less than 6 million shares. What are you doing today? 2 million shares? So yeah, does this thing bounce or maybe go sideways for a while? It could. I certainly would want to see that, test that as far as this thing's already pulled back. Yes? Oh, somebody else. Okay, so let's take a look at the IBB. Nice reversal in this one today, but again, This thing is, there's just not that much to the upside. And certainly the problem is this light energy off the May 3rd low. So IBB's got a nice reversal out here today, but still problematic for me in that I just don't see that much to the upside in it. Yeah, you got $112 out here for the high. What does it go to? 115.60. So if you're in this, the risk reward's kind of tall. And the energy certainly isn't in there, although it is bucking the trend, like a handful of other things. Off 12 points on the S&P cash as we speak. Let's, what do we have here for that? Okay, got enough time to get into a couple other stocks. I also dislike the fact when everybody screams about higher prices. I almost always go a running. We saw that, I think, on Monday with some ludicrous price quote for Tesla. We'll look at that in a moment. And somebody screaming $500 starting yesterday afternoon and into this morning. I forget who it was, but I saw them making the rounds of saying that Netflix could only go higher. And why there's no sell signal yet on Netflix, volume's a little bit better than it was on the pullback yesterday. Again, you get these long runs like this, the more that you stretch the rubber band, the more these things, when the rubber band pops, pulls back. I'm going to say that Netflix has got a very big balancing act to go. The movies, as far and a lot of what they've had on, I look every month and see what's new. I'm going to say it stinks, at least for me. I canceled my Netflix subscription, I think in January, and I keep looking every month. They may have something on there I want to see. And as far as I can tell, I read an article in Variety, which is a magazine and newspaper kind of Hollywood. And, you know, the biggest boom in all of Hollywood right now are the comedy clubs that I used to go to in the 90s when I spent a lot of time out there. They're all the same ones. And the reason that these little comedy clubs are booming is because they are filming comedy presentations, one stand-up specials. And that's a huge amount of what Netflix is putting on. And I think that's kind of an interesting idea to get a lot of new content. It's certainly cheaper. The question is whether or not people are going to hang on instead of the traditional stuff that they had. You know, maybe that's enough. But they had a lot of good stuff on. I'm kind of missing some of these new series that are supposed to be real good. We'll be back in a minute.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks! Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
And I haven't heard much. Somebody asking me if I heard any more about the strike with UPS. And no, it's been really quiet, hasn't it? Just not much going on. Off 12 points on the S&P cash at 2762. Still off 300 points on the Dow, and the Nasdaq still off 30. Russell, everybody keeps flooding in. Got to be in that Russell. Buy, buy, buy. Time to go full margin long in the Russell. I'm being facetious, of course. So what else do we have? Question about the TLT. I've been talking about Joe Granville for a while and saying the only thing I ever learned from him that was decent from listening to him all the time was his Titanic theory of the stock market. And that is when the market starts going down, everybody looks for places to run to. But eventually the stern of the Titanic's going down, just like the bow of it is. Now on the TLT, all you've done is gone to this gap down from July 1st? Yeah, July 1st. June 1st, excuse me. And you had a nice pop down to 7 million shares up on Friday, yesterday, down on 4.6 million shares today, up on 3.6 million shares so far. You're just bouncing around in this gap right now. And you could make a case that this is just the retracement that you've been looking for out here. If you thought that there was an ABC on the way down, 120.96 is the 618. And this thing seems to always go to at least that when you're in these bonds. So you could make a case for a one-to-one expansion on the way down. Did I do this? Let's do this. Let's make that the A, this the B, and today the C. Okay, that takes you to 685. So 68% retracement. Didn't hold that. You pulled back today. That would take you back down for a one-to-one at 117.13, and of course 115.56 on a 1 to 3.82. And my guess is that is the scenario right here that you'd want to be playing on, and that is that this is an ABC down. If you go a little higher and close above, let's say 122, well, not even that, 121.50, just a little higher out here. If you closed above it, that'd probably negate that trade. So we'll see that tomorrow. And of course, if you do start moving back down, I think you got a good case. The energy hasn't been all that exciting except for one day. That was on the 7th, and you got the deal there. So anyway, yeah, 1 to 382 retracement on that takes you right back down to the lows. And this thing just, you had to blow out volume, and you couldn't hold the high back on May 29th. Came right back into the trading range, even though it had all the juice in the world. That looked to me like the exhaustion move. You're coming back up into that move of 21.6 million shares. And of course, we've got 3.6 million shares so far today. So say we end up with 5 million shares or something. That's still a lot less than just 2 days ago with 8 million shares. So you'll look about that. You can give me a call at 877-927-6648. We'll be glad to take a look at that. Okay. Question about Snap. As I was said, I was kind of worried about this thing hanging up here. You'd come up to these gaps. Let's clean this up a little bit. Not unexpected. You had the doji yesterday. I'm not shorting a $14 stock, but at the same time, you came down with what is this? 160 million shares. That was on May 2nd. And yesterday, you were into it with 33.7 million shares. The day before, 27 million shares. But man, you had a doji. You filled the gap, and you moved back down. You're actually going to have better volume than the last 5 trading days. So you're back into the support. You kind of got down there today. What was the low? Well, you're almost there, 1266. I think you probably put the retracements on this. Yeah, 1248 is 50% retracement. I think you want it to get into that 1248 with lighter volume. This is the first day down, and of course, 46 million shares so far today compared to, let's call it 34 million shares yesterday. So you're down, you've come off the high with some volume. You want to at least see this thing come back down to 1248. Now maybe that sets up an ABC. So you've got, what is that, $4 up. You pull $2 back. So that'd be a run to 1650 on an ABC up, but you do need to pull back. At 1650 takes you over this back into, what's this, March 21st. See if we got any more emails out here. Certainly take a look. See if anything else is updated. Okay. Question about the Qs. Let's take a look at it. Of course, this is the one that worried me the most for the last few weeks, because it was a fairly decent indication that this had gone over the previous high with no energy and lighter volume at the highs. You wanted 55 million shares in the highs, and you went over it with 37 million shares, 35 million shares on the 14th, and now you had a doji, a little bit open, a little bit more chasing today, but we're still going to close lower than yesterday's high, so we haven't come back into it, and the Nasdaq's still off 30 points. But this thing that makes me think that we could pull all the way back to 160 on the Qs over the next, well, we're getting close, aren't we? The next 30 calendar days is this gap up on April 26th. You had 43 million shares that day. That 160 looks like where the support is. And all I got to say is I'm looking at stocks like NVIDIA, and it's the strongest of all of them. And you see this one starting to have its weakness today. Not a lot of volume, but you could see this one come back all the way to 220 also. And I think that would be nothing more than just some market weakness. I don't think that actually means that NVIDIA is giving up or rolling over. That could just be a natural retrace in the move higher. But things probably about as good as they can get in this sector. Very tough to see how things get any better. They might, but wouldn't be short it. I think there are a lot of stocks out there to short, like we were short Western Digital. I think there's, the chip stocks, especially in the smartphone part, probably where we want to be fishing if you do want to be short. We'll be back in a minute.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Well, I turned the TV on for just a second here during the break to see what's going on. And what's the first thing? What you should be buying on the dip. No fear about the market. And you look at the VIX, it's printing around 13 right now. No real big fear out here. We had a little bit of a bounce today, but just no real fear in this market. And I don't know, I always want to be fearful when no one is fearful, and I want to be kind of giddy and euphoric when everybody is fearful. And just like it. Anyway, we're off 11, 12 points on the S&P cash. Still off 30, close to 30 on the NASDAQ. Russell just down a tick. Dow's still off 275. Anyway, we were talking about stocks that I wanted to, that I thought are making their ABCs on the way down. Be much more interested in this cellular sector We've got a fairly decent indication on a gap down on Skyworks Solution. Again, a lot of these stocks, no energy off these mid-April lows, April 30th on Skyworks Solution. We already know from Avago and the rest of them that business is going to be down on most of them. It's been kind of ignored for a while, but these guys went to their earnings call and said, hey, business is going to be light the next 3-6 months. Now, could everybody just be looking past that? I think they could. But at the best case, if you're telling me that you're not doing more business, then maybe I hold the price. But maybe the worst, I start selling a little. Anyway, the gap down today didn't have a lot of juice so far. A lot of times you don't get it. Our gap down on things like the SMHs today suggests that there's going to be one more gap down in those SMHs in this leg. I'd want to be keeping a close eye on those next couple of opens. In the meantime, sell when you can, not when you have to. See you here tomorrow. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.